Instant on it this morning. James Frischling is with us, co-founder and president of NewOak Capital. Good to see you, James. You know, it's tough, I'm sure, even for someone in your position who has to make investment decisions theoretically based on what may or may not happen with this health care debate. We don't know what's going to happen yet, do we? Because as we said at the top, we're seeing a pretty big sell-off this morning across the board. What do you make of the markets and how we're acting on a Monday?
My opinion, no, I think it is still a little bit up in the air, but and the anger is what's very clear. Job losses are high, savings and retirement accounts are shot, and this is a lot of people's opportunity to express that frustration, and I think that's right now been the overwhelming issue dominating these town hall meetings.
Right, which lends you back to the original point that we just brought up, which is that this government-run option may be at least, well, may not be off the table yet, but the administration may be open to taking it off the table. The support's not there for it, is it? That's what it's all about?
I think the support is certainly lacking at that for that level of a change. But then I'd also say that Obama ran a pretty successful campaign and won the election with making health care reform one of his key issues. So we're not going to do nothing here.
Yeah. So something will get passed. So you make that assumption. Again, you're making investment-related decisions based on that. You assume something is going to get passed. Any other assumptions that you make, and then what do you do in terms of how you're allocating people's money based on that?
Well, I think that's correct. Actually, I thought maybe the rhetoric was toned down in the public plan to try to get back to some of the essential issues of exactly that, trying to make sure something does get done. Greater health care coverage, greater accountability to the insurance companies, and to a certain extent some level of competition.
All right, James, let me ask you one more question. We're going to get over to Ashley to look at these markets real quick. Let me ask you about them.
Over the last couple of weeks was that the market had gotten a little bit ahead of itself.
Yeah.
We were squeezing shorts, and a lot of money was on the sideline, and that's where the most pain was being caused. So I confess, I'm not surprised to see some of this give up, especially given the consumer sentiment is still weak.
Yeah, it was here on Friday. We saw that. Look at these big declines in Asia. Let's get back over to Ashley, as that's our other breaking story of the morning. Ashley? Breaking news just into us at Fox Business from the banking world. BB&T has just announced a $750 million common stock offering. Again, this is just in. The company saying it's going to use the proceeds of the offering for general corporate purposes. And we want to go to a quick instant on as you look at the BB&T stock price. James Frischling is our guest this morning from NewOak Capital. Talk about needing to raise money in this environment. And here's BB&T coming out, $750 million offering. What do you make of it?
Actually, I'm very happy to see it, and I think BB&T is doing the right thing. I think a lot of these financial institutions, banks specifically, need to raise capital, and BB&T, which is obviously involved now in the takeover of Colonial, along with the FDIC, is doing just the right thing, which is bringing capital into the warehouse.
Stock got a little bit of a run there. It's actually in the last month up about 35%, as the latter end of that chart will tell you. Dilutive, I guess, to common shareholders, a measure like this?
I think clearly yes, but BB&T has actually been on the better side of in terms of the financial institutions, the banks that need capital versus those who don't, or at least a more financially sound institution. But then again, they do have some commercial issues, commercial loans, commercial assets, real estate, right. and I think that's going to be weighing on them a little bit.
Yeah, one of the things we're going to talk about in a little while is the big bank failure on Friday night. It was BB&T, right, that bought that bank that failed, wasn't it?
Colonial Bank was the sixth largest bank failure in U.S. history, and it's amazing to me to see, to a certain extent, it appeared that the market was almost looked at as a speed bump instead of actually something that I think is far more significant.
But and we'll get into those. I want to take after we take a break. We're going to get into those details and some specifics about bank failures, generally speaking. But BB&T pretty well positioned to kind of scoop up some of these banks that fail, or no?
Absolutely. In this situation, BB&T was the strong hands. The FDIC helped broker a marriage, taking over Colonial, putting some of the FDIC's fund behind it. But yes, BB&T should be
they're one of the winners.
They're one of the winners.
They're one of the winners. And now a $750 million common stock offering this morning. You say it's good news they can raise that kind of money.
Absolutely.
All right, James. We're going to talk more about those bank failures in a moment. BB&T obviously will be a stock to watch. James mentioned how that bank failure was the sixth largest in history, and we're now up to 74 bank failures this year. So the point is, are we getting numb to it at this point a little bit? James has some thoughts on that. He's going to share them coming up. We'll also keep an eye on the market. Back here at Fox Business Morning on a day when the market is selling off pretty aggressively to talk a little bit about bank failures, because Friday night we had the biggest one of the year. We haven't talked that much about it this morning. FDIC shutting down Colonial Bank based in Alabama, selling to BB&T, which we did talk about a little bit earlier because of their offering that came out this morning, stock offering. But are investors bothered by these bank failures? And should they be? James Frischling, co-founder and president of NewOak Capital, has some thoughts on that. James, it's interesting because we are now 70 plus so far this year, and we don't give it a ton of attention. They come in late on Friday nights, and usually, exception to this time because it's a big failure, usually by Monday morning we're barely mentioning it.
I think that's right, and I've been a little surprised at how numb or indifferent people have been to the strains and stresses that the banks are still facing.
What does it tell you that we're not paying more attention, or that investors aren't paying more attention to it?
Well, I think everyone is trying to, as best they can, talk up the situation and try to express that the worst is behind us and we have far better days ahead. I think Friday night's Colonial failure, again, the 6th largest in the U.S. history, I think is a sign that we are far from out of the woods yet.
And why is that? What did that Colonial Bank failure tell you in particular?
A couple of things. One is that Colonial had tried to raise capital and obviously failed to do so. There were those who were just unwilling to get involved. The bank's balance sheet clearly was far more stressed than at least the executives would wish the market had viewed it. Two is, I think that the commercial space continues, commercial real estate, commercial loans, while the resi market is arguably at a bottom, and again, that's just an argument, there's the feeling that the commercial space is just starting to erode, and that was clearly a problem for Colonial.
Now, you're talking about a lot of regionals there that are affected by that, right? So you're expecting more of these. I mean, any way to quantify how bad things could get?
Again, the majority of these bank failures are fairly small. However, I understand the numbers could be in the north of 1,000. Actually, I hear some people telling me closer to 2,000.
Well, that's a lot.
That's a lot.
2,000, that would be a lot, because my next question was going to be, hey, you know what? We're not falling off a cliff anymore, so the economy's not as
that are probably in need of capital.
Right. Maybe a perilous position as it was last fall. So the rosier argument would be, all right, maybe we'll get some more failures, but we can absorb
to invest it.
That's
correct. And I don't want to suggest there's 2,000 more failures coming. Again, the banks are having a hard time raising capital. And then there's the issue of who the bank's partners should be. There's a growing concern that the private equity firms may not be the most ideal, I guess, partners, but at the end of the day, they're the ones with the capital and they're the ones with the sincere interest of getting involved.
Right, and in this case, nobody wanted to get involved until the FDIC had to step in and make it happen for BB&T. Okay, James, good thoughts. We're going to have to keep watching that story, certainly. All right, more on our top stories are for an instant audit now. Fox Business contributor Charles Payne, WStreet.com, is here, as is James Frischling from NewOak Capital. So it looks like Andy Cuomo's going to go ahead and sue Schwab. I mean, this auction rate story, we've talked about it for months now, right, on and off the table. What do you make of it from a small investor's point of view? That's who deals with Schwab most of the time.
Yeah, although these weren't necessarily cheap, so you know they had to be higher-end customers of Charles Schwab. I think maybe Charles Schwab might be missing the issue, because I'm not so sure the issue is whether or not they knew that the auction rate market would collapse, right, but whether or not they let the buyers or holders of these understand the risk. And it's going to be tough. I think it's going to be an uphill climb, because you had so many other firms buy back these things, $60 billion worth. Even last week, Wachovia bought back $300 million worth in Pennsylvania. So this is really, for a company that really prides itself on its public image, I'm really shocked that they would allow this to go this far.
Right, because now we're still talking about it, whereas if you settled, maybe we wouldn't be. I know you don't want to, James, necessarily admit you did nothing wrong if you don't think you did, but how would you handle this situation? Hypothetically, you see a lot of your competitors have already settled and kind of, as Charles said, swept this thing under the rug, and now you're still dealing with it if you're Schwab. I wonder why they're going down that road.
I think the challenge they're facing is that they essentially acted as a broker or a salesperson to their customers, to their clients of other banks and much more deep-pocketed institutions, auction rate preferred. So the issue they're facing is, did they fully understand the product? Well, clearly the market misunderstood this product. However, they were, at the end of the day, the one who placed it with their clients, and they're going to be held accountable for it. So I agree with you. I think they should do a far better job of stepping up, as many other banks did, to at least come to some settlement agreement.
All right. We'll see how it plays out. Thanks, guys. Good points. James and Charles will be back to talk to both of you guys about the markets in a little while, but right now...